All right, let's dive right into today's explainer. We are opening up a massive, dense, and honestly, highly anticipated document that has been making some serious waves across the financial sector. I'm talking about the Red Herring Prospectus for the Caliber Mining and Logistics Limited IPO. Now, if you've been tracking the infrastructure and commodity space at all, you know this one has been building some real momentum. But we aren't just going to skim the headlines today. No way. We're going to strictly follow the data provided in this filing and break down the mechanics, the money, and all that crucial fine print that every investor absolutely needs to grasp.
45,000 lakhs. I mean, wow, right? That is the total offer size we're looking at here. When a number this significant hits the market, it instantly establishes the financial stakes. This isn't just some minor capital raise. It is a major liquidity event. But here's the thing, a number this huge in an IPO document is never just a single monolithic block of money. As we'll see in just a moment, it is carefully sliced, strategically allocated, and distributed in very, very specific ways.
But before we dissect that giant financial figure, let's actually ground it in the real-world entity behind all the paperwork. Caliber Mining and Logistics Limited has actually been around for a decade. They were originally incorporated back in July 2014 under the name Caliber Mercantile Private Limited. Over the years, they've obviously evolved, changing their name to reflect a focus on mining and logistics in mid-2024, and then converting into a public limited company. Their operational roots are planted firmly in the MIDC Chandrapur industrial area in Maharashtra, with a corporate office in Nagpur. So when we talk about this capital raise, we're talking about a decade-old operational entity finally stepping out onto the public stage.
Okay, let's get into Section 1, breaking down the numbers, fresh issue versus offer for sale.
So when we split up that massive 45,000 lakh pie, the vast majority of it, an aggregating sum of up to 40,000 lakhs, is categorized as a fresh issue. The remaining 5,000 lakhs makes up the offer for sale. Understanding this exact split is absolutely critical because it tells you exactly where the capital is flowing on day one.
Let's clarify that smaller slice for just a second. An offer for sale, or an OFS, simply means that existing promoters or shareholders are selling their personal equity stakes to the public. The crucial point you need to remember here is that the money raised from this specific portion does not go into the company's treasury for growth or paying off debt. Nope, it goes directly into the pockets of those selling individuals. It's effectively a cash-out mechanism for the early stakeholders.
So who exactly is cashing out in this 5,000 lakh OFS? Well, it breaks down to 4 key promoters: Mohit, Anuj, Manish, and Rahul Chadha. They're each selling an equal block, aggregating up to 1,250 lakhs per person. But listen to this. I want to draw your attention to their weighted average cost of acquisition. We are literally talking about fractions of a single rupee per equity share. We've got 0.34, 0.25, 0.42, and 0.26 rupees. When you contrast their initial, tiny entry cost with the current valuation dynamics, it really highlights the incredible premium at which these existing shares are now being offered to the public.
Which brings us to Section 2, the pre-IPO placements, institutional early birds.
Now, for those who might not track the minute-by-minute timeline of an IPO, a pre-IPO placement is basically a private, perfectly legal sale of large blocks of shares to early investors just before the stock hits the public exchange. It's a smart way for companies to lock in capital and for certain investors to secure their positions way ahead of the retail crowd. And Caliber, well, they utilize this mechanism quite aggressively.
According to the prospectus, the company, working right alongside their book-running lead manager, undertook pre-IPO placements in 2 tranches, totaling over 2.3 million equity shares. But the really important number here is the price, 424 rupees per share. That price includes a substantial 414 rupee premium sitting right on top of the 10 rupee face value. Through this early bird action, they successfully aggregated 10,000 lakhs. That's 6,000 lakhs in the first tranche and 4,000 in the second. The document notes this money will be used for general corporate purposes, all monitored by their designated monitoring agency.
And you know what? That early move had a direct mechanical effect on the offering we're looking at today. Because they raised that 10,000 lakhs early, the original size of the fresh issue was legally reduced. The prospectus makes it super clear that this early placement didn't exceed 20% of the original fresh issue size that was disclosed in the draft Red Herring Prospectus. So that 40,000 lakh fresh issue we discussed a minute ago, that's the revised, finalized number, and it's entirely thanks to the successful pre-IPO maneuvering.
Moving on to Section 3, key players and dates. The July 2026 timeline.
You really can't execute a public offering of this magnitude without some serious administrative heavyweights. While Caliber is the issuer, the logistics of the offer itself are being managed by two critical entities. First up, we've got Dam Capital Advisors Limited stepping in as the book-running lead manager. They're the ones determining the price band and guiding the whole book-building process. Then there's KFin Technologies Limited acting as the registrar to the offer. They act as the essential infrastructural backbone. They handle the ASBA forms, the UPI mandates, and ultimately they figure out who actually gets allocated shares. And they are operating on a very tight, rapid-fire timeline. As outlined in the prospectus, the countdown is happening right now in July 2026. Today, Thursday, July 16th, is the crucial anchor investor bidding date. This is where up to 60% of the qualified institutional buyer portion may get allocated. Tomorrow, Friday, July 17th, the bid and offer officially opens up to the broader public. The window then stays over the weekend and completely shuts tight at 5 p.m. on Tuesday, July 21st. If you're tracking this, these are the exact dates where the market decides the fate of this issue.
Next up is Section 4, Understanding the Risks, reading the fine print.
Now we need a bit of a sobering reality check, and it's found directly in the risks in relation to the first offer section of the document. The company states verbatim, "This being the first public issue of equity shares of our company, there has been no formal market for the equity shares of our company." It's a stark reminder, honestly. No matter how much pre-IPO placement happens or how well established a company's private history might be, stepping into the public market means stepping into complete uncertainty.
The prospectus systematically outlines several general risks that you really must understand. First, the face value is merely 10 rupees, and whatever the final offer price turns out to be through the book-building process, the company explicitly warns that it shouldn't be taken as an indicator of future market prices. Furthermore, they can give zero assurance of an active or sustained trading environment post-listing, but most importantly, they include the standard but very severe warning that equity investments involve a high degree of risk. Basically, they're saying you shouldn't put funds into this offer unless you can afford to take the risk of losing your entire investment. We are strictly explaining the source material here, and folks, the source material demands caution.
Which brings us to our final, ultimate question for anyone analyzing this document today. We've seen the massive 45,000 lakh offer size. We've seen promoters with acquisition costs of literally pennies cashing out big time. We've seen early institutional investors willing to pay 424 rupees a share before the public even gets a look. And yet the company itself clearly warns of the unpredictable volatility of a maiden public issue. So as this rapid timeline unfolds over the next few days, we really have to ask ourselves, with these high early valuations but absolutely no formal market history, is Caliber truly unearthing new possibilities for the public investor? Or are they just unearthing unprecedented risk?